you could be missing out on thousands in tax refunds. This is for anyone looking to maximize their savings during tax season. We'll explore the 5 most overlooked tax deductions you can claim to ensure you're not leaving money on the table. Point 1. Job search expenses. Many overlook the fact that when you're searching for a job in your current occupation, certain expenses can indeed be deductible. Imagine spending $3,500 on resume services, travel, and meals during interviews. By claiming these costs, you could save yourself upwards of $700 in taxes at a 20% tax rate. Yet, typical advice often misses these deductions because they're only deductible if you itemize deductions on your tax return. According to the IRS, only about 1 in 3 taxpayers itemize their deductions, leaving millions without these potential savings. Consider this. A study by the National Bureau of Economic Research found that over 10% of job seekers neglect to claim deductions related to their job search. That's a significant gap I'd wager you wouldn't want to fall into. So, the crux of the issue lies in how these deductions interact with standard tax filing, and that's why it's easy for them to slip through the cracks. It's all about knowing the rules and planning a strategy that matches your financial profile. So, how can you right this ship? Moving on, let's delve into point 2 to uncover other overlooked areas ripe for deduction. You could be missing out on thousands in tax refunds. It's a statement that stirs both curiosity and concern. Many taxpayers each year overlook certain deductions simply because they're unaware they exist. So today, let's discuss how you can increase your income by paying attention to these overlooked tax deductions. Point 2. Education and student loan interest. It's remarkable how education-related deductions often fly under the radar. Did you know that you can deduct up to $2,500 in student loan interest? The IRS allows this adjustment to your income even if you don't itemize deductions. For example, if your student loan interest payments were $1,800 last year, you could potentially save $450 in taxes, assuming a 25% tax bracket. Furthermore, the Lifetime Learning Credit can provide you up to $2,000 per year by subtracting the credit directly from your tax to be paid. A study by the National College Attainment Network found that 14% of eligible Americans failed to claim educational credits. Those are thousands of dollars left on the table. Point 3. Job-related expenses. It's surprising how many people miss out on this. If you're in a profession that requires specific tools or uniforms, listen closely. You can often deduct those expenses as long as they exceed 2% of your adjusted gross income. Let's say you earn $50,000 annually and spent $1,300 on a mandatory uniform and tools. Only the expenses over $1,000, which is 2% of your income, are deductible. That means you can deduct $300, saving you $75 if you're in a 25% tax bracket. These might seem like small numbers, but they certainly add up across various overlooked tax deductions. And if you're a teacher, there's an additional $300 deduction just for classroom supplies, which may not even cover a fancy chalkboard or two, but every bit helps, right? Let's pause for a moment before we transition into strategies you can employ to make sure these deductions are not forgotten in the future. This will ensure that your tax strategy moves from reactive to proactive, enhancing your financial position year after year. Point 4. An actionable plan you can implement today. Let's talk about tracking your overlooked tax deductions with a 30-day system. Begin by dedicating 1 hour this week to brainstorm potential deductions. Consider business expenses, charitable contributions, and educational costs. In week 2, gather documentation for these deductions. Receipts, verification letters, and bank statements are crucial. Use tax software or a simple spreadsheet. Commit to updating this record at the end of every month. Week 3 is your review period. Compare your projected deductions to your current tax return. Identify the gaps and adjust your claims accordingly. Lastly, in week 4, consult a tax professional. Armed with your detailed records, they can ensure accuracy and potentially unearth more savings. The strongest objection might be the time commitment. It may seem like a daunting task, but consider this. Just 2 hours a month on deductions could lead to thousands in refunds. Besides, think of the return on investment, like finding an extra day of annual leave. Remember, you could be missing out on thousands, and this step-by-step plan connects you directly to those savings. If you found this guide helpful, consider subscribing for more insights that translate directly into financial gains. Thank you for watching.